Stocks get off to a flying start for the week after PM Modi promises a Diwali gift in GST reforms to benefit local vendors and consumers. Auto, realty, consumer durable, cement and insurance stocks rally, but IT drags.
India's Director General of Trade Remedies has actually extended the safeguard duty on flat steel set to expire in September by 3 years, with a graded rate structure moving down from 12% to 11% over the period. The move is a big relief for steelmakers.
Talks between India and US on trade slated for August 25th have been pushed back, upping the likelihood of the additional 25% tariff on US imports from India coming into effect from the 27th of August.
Prospects of some resolution on the Ukraine war and Trump's positive commentary following his meet with Putin leads to oil cooling further as hopes of Russian crude supplies continuing to flow rise.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it is turning out to be a session where we are seeing a lot of green. It's raining outside in Mumbai, but it's raining green on the market, so that's definitely a positive. The proposed GST review has definitely boosted sentiment, and that's the big reason why you're seeing these kind of gains come through. The broader markets are outperforming this afternoon, and we have a positive advance decline ratio on our hands as well. Stocks, a lot of stocks continue to be in focus. It's the end of the earnings season, so we have had some result reactions. Zaggle, Vodafone Idea, Glenmark, all of these stocks up and about in today's trading session. But overall, good start to the week. Let's see how it continues. But nonetheless, sentiment is on the positive. The meeting with regards to the Ukrainian government as well will be in focus.
Absolutely, that'll be in focus. And also this week we do have the Jackson Hole Symposium as well. So some commentary that could come in on that front. Let's keep an eye out on that as well. But today, a green day coming in on the screen as well. The only sector that's managing to not hold on to gains or, flip-flopping between the red and the green is Nifty IT today. So keep an eye out on that one. A bit subdued in today's trading session. But apart from that, autos doing well. We have even Realty doing well. So all sectors holding on to very, very strong gains. And a lot of move that is happening today is because of those announcements that came in on 15th of August as well. That was the GST move. So a lot of stocks buzzing on the back of that as well. So keep an eye out on all those stocks as well. But on that note, we do have DGTR that has recommended the final safeguard duty on steel imports for 3 years. Nigel is joining in with us to give us details on this one. Nigel, good afternoon. And, what does this mean for steel companies? Now, what are we watching out for here?
Well, that's right. The DGTR has come out with their recommendations. They believe that the steel companies require some protection, and they've given their outlook for the next 3 years or so. So in year one, the duty that they have recommended is around 12%. Year two, it falls around 11.5%. And year three, it'll be closer around 11%. Now, this will be positive. Keep in mind, though, that for the last 5 months or so, we have a safeguard duty of around 12%, which was to expire in the next month itself. What this does with regard to the recommendations of the DGTR, it ensures protection for the next 3 years or so. So that overhang goes out of the way. There is protection that comes into play for the domestic steel makers in this sort of an uncertain, environment that's playing out because of the tariffs globally. And the next step will be the finance ministry's nod. So the big gainers will be obviously the big players. You'll have Tata Steel, JSW Steel, SAIL as well as JSPL. While the smaller ferrous players as well, they'll take heart from the fact that they'll at least be protected from inputs. That keeps pricing, in favor of them and helps them in terms of profitability. The indirect beneficiaries will obviously be the likes of NMDC that makes iron ore and stocks like APL Apollo that are pipe makers as well. So good news coming in for the ferrous space. That overhang goes out of the way and they are assured of protection for the coming years. Back to you.
Okay, but Nigel, that's on steel, but you're also looking at JK Cement, which is buzzing in trade on the back of its possible expansion plans. Tell us more.
Well, that's right. For cement, there's another benefit that's coming in because the GST rate's currently at around 28%, right? If there is rationalization, it comes down to around 18%, which means that the governments lose out on revenues of close to around 25,000 crores. But it's likely to boost up volumes. And that's why the cement space itself is buzzing around. What did JK Cement announce? Well, they've announced their big capex plan. The total grinding capacity that they've announced is around 7 million tons approximately. The clinker capacity will be around 4 million tons. So at Jaisalmer, Rajasthan, they've announced 4 million tons of clinker with 3 million tons of grinding facility. And in the other two locations, that is in Rajasthan as well as in Punjab, out there they have announced 2 million tons of grinding capacity itself. So put it together, 7 million tons of grinding and 4 million tons of clinker capacity. The broad details they've given is that the total capex will be around 4,800 crores, which means that on a capex per unit or an EV per ton, they'll be expanding at around $82 per ton, which is a sharp discount in comparison to replacement cost. And this facility goes live in September 2027. What does it effectively do? Well, their capacity moves to around 37 million tons by 2027 September, and it puts them on track to hit that 50 million tons that they had cited that was their target in the times to come. So good news coming in for JK Cement, that capacity expansion being met with a thumbs up. Back to you.
Okay, thank you so much for that, Nigel. Keeping an eye out on JK Cement as well. But let's move on. And as we have been highlighting, the big story of the day has been the proposed revision of GST rates by the central government. Now, today on the big story, we are going to put the spotlight on what can change, who can benefit, and how. And all this will be explained by Hormas to us right now. Hormas.
The big announcements, of course, made by the Prime Minister in his Independence Day address, and that is showing up on all of these auto names, the consumer durable names, all of them seeing a big rally today. Take a look at Maruti is up 9%, Hero MotoCorp is up, Ashok Leyland, all of them are gaining up to 8%. Look at Voltas, Blue Star, PG Electroplast is now up 13%, even with the stock being in the F&O ban. So a big rally seen across the auto names, the consumer durables names, the insurance names as well. But look at what brokerages are highlighting in terms of potential GST beneficiaries here. Jefferies is expecting this to take place in the fourth quarter of calendar year 25, which is between October and December. And three sectors they highlight where the rates could be trimmed from 28 to 18, which is cement, two-wheelers, and these AC names as well. And some of the other sectors where they can see rate rationalization includes insurance, hybrid cars, processed foods, and garments and footwears as well. On the passenger vehicle front, they are also mentioning that a proposal for rate rationalization could not be ruled out in this segment as well, which is why you see this rally in names like Maruti and Hyundai. Now, Citi is highlighting the key beneficiaries, which include the likes of medicines, processed foods, non-alcoholic beverages, certain apparels over a certain price pocket, white goods, insurance, and cement names that are the likely beneficiaries of a potential GST cut. And this GST rate rationalization, coupled with the interest rate cuts by the RBI and the income tax cuts announced earlier in the budget, could boost the festive season demand and in turn boost the FY27 earnings outlook as well, is what Citi is highlighting in its note. Kotak believes that this will be a 2.5 lakh crore boost, this rate rationalization, but the prime beneficiaries here would be auto and the consumer durable names, not so much for cement, because cement does not have enough price elasticity, and as a result of which the benefits here could be limited in comparison to auto and consumer durables. Now, Goldman Sachs believes that consumer products in this 12% slab could be some of the key beneficiaries here. You look at Trent, where 1/3 of their sales are from the apparels that are worth 1,000 rupees and above, and they also mention that in case the footwear GST for a price band above 1,000 rupees and more is cut, the metro brands would be a key beneficiary of this. And some of the other names that Goldman Sachs highlights include the likes of Page Industries, Bata, Dabur, Nestle, and Titan as some of the rate rationalization benefits. Now, CLSA believes that the materials, consumer durables, cement, and AC makers could be a key beneficiaries here. But for AC makers in specific, they highlight that this sluggish period of demand, the lack of demand that these players have seen, that could receive a boost because of the GST rate cut, and that could be a significant trigger for them. And Bernstein is also highlighting the insurance space. Insurance stocks are also rallying today. They say that they could also come under this rate rationalization bracket. For the Nifty, they say that despite all of this tariff uncertainty and hopes of an earnings upgrade, the Nifty could see high single-digit returns over the rest of the year. And they also mentioned that they are retaining their sectoral view of consumer stocks over industrial names. They are overweight on staples. They had upgraded durables as well earlier this year, and they retain their underweight rating on industrial. So auto names and consumer durable names are the big talking points because of this rate rationalization prospects, but insurance names making a move as well.
Yes, absolutely. And the markets in fine fettle on the back of these proposed GST reforms. Thanks very much for that, Hormuz, for bringing us all of the stocks which would be in focus on account of that. We need to take a short break. But up next, we have the management of TCI Express joining in to discuss the quarter gone by. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. Now, TCI Express, that reported its Q1 numbers, a muted set that came in from the company. And the revenue declined for the 7th consecutive quarter. Now, what does it mean for the company going forward? What are we watching out for, especially in terms of this GST rationalization that's come in as well, plus the outlook of the company going forward? We do have Mukti Lal, CFO at TCI Express, joining in with us to give us those details. Hi, sir. Good afternoon. Thank you so much for giving us your time. Let's start by talking about the numbers first. Revenue this time, again, a muted quarter that's coming from the company, right? So what are we watching out for now in terms of the overall growth guidance that you all have given? 11 to 12% is what you all spoke about. Will you all be able to achieve that for FY26? And anything in terms of growth drivers that are there for the company for this year?
This quarter we also anticipated like flattish quarter, and it was on the same way. And in this year, we targeting kind of like 8%, 9% volume growth and 11% revenue growth. So this is basically, we are targeting enhance my rate increases with the customer, which we did already in quarter one around 50 basis point. And this way, also we have strategized to be enhancing our multimodal businesses also, which includes Rail Express, C2C, air, domestic and international. So these will also help us to be grow faster than our, business. A major chunk is coming from surface business. So we also enhancing this businesses on a fast growth. So ultimately, interestingly, one thing happened where we're seeing more stability in comparison to last year. We have more predictability, like we have seen in last year. We predicted something else, and then volumes has not come on that way. But in this year, macros of economies are, I think, really in a well position, and like inflation is under control, and people now buying the more things.
Right. So then that 11 to 12% will be sustainable in terms of revenue growth.
Yes.
Your guidance for the full year. And volume growth also, you will be able to manage it at 8 to 9% that you've spoken about, right? So expecting a recovery now coming in Q2 and onwards, you're expecting much better growth.
Yes, that's absolutely.
Mr. Lal, just while you are quite bullish in terms of the guidance, what is the demand scenario looking like, considering that your revenue was down for the 7th consecutive quarter in terms of sales?
Yeah, so if you see, like our revenue is down almost like in a range of 2-3%. So there is no structural kind of thing. It is like matter of economies is not growing well where we operate in. So segments like continuously engineering segment, lifestyle products, they still are like under flattish kind of growth. This is not improving due to private capex has not taken up yet. So these are the basic scenario where we not improve that. That's why one of risk is there. We have only one line of business in our company, and that's we want to be de-risk this line of businesses. That's why we added similar kind of other express services as a multimodal. So these will also be help wherever supposing one business is not doing well or one's line of service is not doing well, then other has to be support. So that's why with this strategy we going to be improved in time to come, and certainly we create a network for these services also. We also added the branches. So I think we will be in a better position in this year.
Okay. So I just wanted to narrow down on the margin picture, because you've done sub 10% margins for the past 3 quarters. You are targeting 15 to 16% for FY26, FY27. Is that correct?
So we targeting, in the range of 14 to 15%. So basically why I am so bullish on this margin improvement, because our margin has declined in last year due to we created a network for our multimodal products. And there is some issues in, like we face the inflationary challenges in toll and labor costs. that is a very good news where we already stabilize the cost, which you seen in a Q1 results also. So this will be help us to be improve our margin, because once we get the volume, it is directly add to our capacity utilization, which is hovering around 82%. So whatever we add, that will be directly add to our margin, which we also did in FY23 in the range of 15%. So we'll be back to normal, because there is nothing change on that side. Rather, we are in a spree where we want to be improve and pass on to customer. That is also a planning to we have at least 200 basis point to customer, because now an overall macro situation of economy is positive. Customer is also responding to accept the price increase and all. So this way will be certainly move towards 14 to 15% in this year.
Sure. Also, just talking about the C2C segment for the company, as well as that Surface Express, where you're focusing a lot more, that seems to be fructifying in terms of growth. Do you think that growth is going to be continuing for the Surface segment, as well as, in terms of the C2C segment as well?
Yeah, so, Surface is our key segment, where we generating almost 83% revenue on overall basis. So that is also always in our key strategies to improve that. And now, again, as I said, to de-risk of that, that's why we want to be added these other services. Those is like completely Surface Express would be continue to the key growth driver for us, because here we already de-risk in, because we doing various segments, we serving various segment in Surface also, and also de-risk in terms of big customer and small customer. So good news here, SMEs also started to be improve the businesses due to lower inflation and slightly stable labor cost, and there is nothing I think is disrupting things we seeing in a near future for these SME customers. So hopefully this will be help to grow this simultaneously, but we want to be slightly more growth in multimodal products. So we will be growing Surface in the range of 8-9% in revenue terms, and multimodal we can be grow in the range of 14-15%, which we given the number in Q1 also, where in C2C we grown almost 14%, air international we grown almost 30% plus. So this will be help to make the things in balanced.
Okay. Just before we let you go, there are a lot of uncertainties right now with regards to the tariff situation. We also have the GST reforms which could come through by Diwali. So give us a sense in terms of how these two parameters are probably playing out for your business as a whole, where the tariffs are probably impacting exports at this point. And on the other hand, we do have the GST reforms, which could be a consumption boost.
Yeah, well, exports we are not dealing in outside India businesses much. Our domestic business is almost 98%. So I don't see any impact for the tariff. And other thing, you rightly mentioned, so tariff is basically targeting to improve the manufacturing in India, and that will be, I think, helpful for the company as a whole, because we majorly focusing on domestic. And yeah, so I don't see, and the GST, we already under a category of 18%. So tomorrow, supposing they will be rationalize the rates from 18 to 12 or whatever range, and also goods. So it is hopefully is creating more demand, which is overall countries facing challenges in the last more than 1 year. So it will be a positive for the overall logistic and express industry more, because with the quick commerce is coming, so more and more shipment is going for their dark storage from the direct brand to the dark store. And interestingly, that business is also increasing where directly brand sending to customers. So I think with the increase in reduction of GST rates will be certainly help to more consumption in the country, and ultimately we will be ship the more consignments.
Okay, absolutely, Mr. Lal. Thank you so much for joining us this afternoon, giving us an insight in terms of what we should be watching out for from the company going forward in FY26. So that's the management of TCI Express, maintaining the guidance in terms of volume growth, the revenue guidance, and targeting an EBITDA margin of 14 to 15%, given that there was a decline last year as well. So on that note, let's step into a very short break. Don't go anywhere. We'll be back with more news and updates after the break.
Welcome back. Well, the markets have come off from the day's high, so just watch out for it. It's an over 300-point correction for the Bank Nifty from the top. We also have the Sensex, which is, shaved off from the top at this point in time, but it's still holding on with a gain of around 1% along with the Nifty, which is up around 261 odd points. So yes, there's some amount of profit booking which is taking place at higher levels, but nonetheless, the sentiment seems to be intact. Just watch out for Marksons because that stock is in focus. They've received an approval from the UK regulator for a diabetes drug, and that's the reason why you're seeing the stock spike around 2%. Remember, it's an underperformer. It's down around 38% year to date and 19% this month itself. But nonetheless, for today, it's seeing some amount of respite up around 2.3%. But Vivek now joins in. He has a more comprehensive list of all of the buzzing stocks you should be tracking. Vivek, over to you.
Well, thank you so much for that. Despite the bit of a knock we've taken in the last half hour or so, the market breadth continues to remain very, very strong. We have to start off with the names, that are clearly benefiting from the likely GST cuts that could come about. And the one pack in focus clearly is the auto pack. Especially look at some of the names like Maruti, Hyundai, companies that make cars in the slightly more affordable range compared to some of the larger peers. Also, the two-wheeler names, look at Hero, Bajaj Auto, Eicher Motor, all of these names amongst the top gainers in the session today. The other set of stocks that are doing very well is the entire consumer durable pack. So again, especially in Q1, you did see the impact of what's essentially been a weak summer in all of these names. Stocks were significant underperformer. All of that, almost in a single session is recovering very sharply. So look at names like Voltas, Havells, even a PG Electrolast. Remember that stock took a knock of close to 30%. That stock's recovered very sharply. Blue Star and even an EMS name like Amber is doing very well in the session today. Well, the other set of stocks that are doing well is the PVC pipe makers. Now, over the weekend, the DGTR has finalized its finding on the anti-dumping duty for PVC suspension resin. So in another 2 to 3 months, you could hear and get a final decision from the Ministry of Finance. But on hopes of that, all of these names like Astral, Supreme, these names are doing very well in the session. Endurance Technologies came out with their results over the weekend, held a conference call as well. The company says that the total addressable market as far as ABS is significantly higher for them. On the back of that top gainer as far as NSE 500 is concerned, and Zaggle prepaid. Strong Q1. We had the management earlier reiterated their guidance of close to 35 to 40% top line growth. That stock higher by 9%. On the other hand, a few laggards as well. Deepak Nitrite, clearly that particular stock, very weak Q1, underperformed last week. Today, another 2% lower. Godfrey Phillips, worries of likely further cess coming in as far as Sin Goods is concerned is a bit of a worry. Plus, corporate developments within the company itself. That stock is an underperformer today. And Glenmark Pharma, clear miss against what is very limited street estimates, but that stock down over 2% today.
Okay, Vivek, thank you so much for that. Important stocks to watch out for in the second half of the trading session as well and where they're headed. But we do have Manish Hatiramani, who's from Deen Dayal Investments, to talk to us about the technicals. Manish, good afternoon. Right now, given that, in the last few minutes or last half an hour, we've seen a bit of a correction coming in for the markets. What are the levels we're keeping an eye out on, and will 25,000 be a key level to watch out for? Because it seems like there's some bit of a profit booking every time we reach there.
Good afternoon to you and to all our viewers. Thank you so much for having me on the show. Well, I was on this show last week when I had discussed about a very strong support at the level of 25,300. If you go into time, we have respected that very well and we have bounced from there. However, like you correctly said, bang on 25,000 to 25,100 is the current resistance that we are facing. What I'm really looking out for is a close above the levels of 25,100. Only if we can achieve that, the index should be moving to 25,450 to 25,500.
And which are the stocks that you're keeping an eye out on?
Since it's looking bullish, I'm working with 2 buy calls. My first one is on Asian Paints for a target of 2650, stop loss of 2475. After taking good support around the 2300 levels, the stock has steadily moved up and we have crossed multiple hurdles of 2400 and 2500. The second one is on Tata Motors for a target of 720, stop loss of 655. 665 was a resistance level and we have kind of flown out of that this morning. We need to sustain 670 on a closing basis. If we're able to do that, 720 and 750 should be the next levels to watch out for.
Okay, all right. Just quickly, what is your view on a stock such as Endurance?
Well, if you look at most of these stocks today, they've all like flown out of their resistance zones. What is really key is to see if they're able to take out today's high. And when I say take out the high, I don't mean an intraday high. I want to close above the high. Only then, from a technical standpoint, we'll be able to give the next set of levels.
Okay, all right, Manish, we're going to let you go on that note. Thanks very much for joining in and giving us all of those technical calls. Well, let's now hop across to Nigel, who's going to give us an F&O update this Monday afternoon. Nigel, over to you.
Well, it was a very, very good couple of hours of trade, but the Nifty seems to have slipped off a little bit from the top. And the reason is, a couple of heavyweight sectors, they in fact have slipped. Reliance Industries, that's like a, index by itself, more than 10% weightage. It's still holding in the green, but it's come off a little bit from the top. The one that's underperforming today is actually the IT pack. That one has come in for some profit taking, and the last time I checked, that as well was under some pressure. It's down close to around 0.8%, clearly dragging the index. The Nifty Bank, well, that showed signs that it's coming back to life. Unfortunately, it hit a resistance at around the 20 DMA, and that's done a bit of a U-turn from that front. So for today's trading session, conquering the 20 DMA will be extremely important for the Nifty Bank. Remember, a few sessions ago, we had mentioned that this one was doing a relative underperformance, and today it showed signs that it wants to get past that 56,000 odd mark. But it hit resistance at the 20 DMA, and that's pulled back a little bit. Moving to the Nifty itself, we're looking at the options data right now, and just pay careful attention to this. The 25,000 call, that's the most active call in today's trading session. The premium out there started the day at around 30 rupees. So those that bought getting into the weekend, well, their money has already become 3x. However, at around 100 rupees, we are seeing some writing at this particular strike. So that's telling you that at higher levels, the bears believe they want to defend this particular strike. On the downside, though, this 24,900 put, that's one of the most active strikes, and the premium has come down by nearly around a third. We ended Thursday's trading session with premium at around 290 rupees. So for those put writers, well, they still have 300 rupees of cushion. It's come down to around 100 rupees approximately, which tells you that these put writers at around 24,900, they have pocketed the 300 rupees premium, and they are looking to defend the 24,600 odd mark. So for those put writers, they're still in the money till this level does hold out. However, on the upside, the 25,100 level, that's an important resistance mark, because there's massive open interest built up at this particular call, and with the premium at around 100 rupees, it looks like the writers actually are in force. In Thursday's trading session, there was some out of the money call buying, but today there appears there is writing at that level. Moving to individual stocks then, Maruti Suzuki. That one's actually seeing fresh buying in terms of open interest, because the stock has gone up by close to around 4.5%, and open interest has surged up more than 15%. So fresh long build-up is what we're seeing on that one. From the auto ancillary pack, giving Maruti company on the upside is Uno Minda. That as well was up more than 5%, and open interest has moved up. So there is fresh buying being seen on both these two counters. The stock that was shorted very aggressively around 10 sessions ago is PG Electroplast. Take a look at the shorts. They are running for cover. Open interest is down by close to around 7 to around 8%, and the stock is flying away. That's more a function of short covering that we're seeing out there. And Voltas as well. The stock is up, no big open interest built up, telling you there's a bit of a squeeze taking place even on this particular name. So keep an eye out on these names. And finally, PNB Housing Finance, the total open interest needs to go down by around 0.5%. If that's the case, it comes out of the F&O ban. There is some shedding, around 0.5% shedding of total open interest. It needs to come down by another 0.5%. Then it breaches that 80% odd mark, which makes it eligible to come out of the F&O ban. So good start. Some kind of profit taking. The bulls will want to fight back towards the end of today. Back to you.
Absolutely, Nigel. Thank you so much for that. So keep an eye out on that update coming in on the F&O front. On that note, we're going to slip into a very short break. On the other side, we'll be joined by Manisha Gupta, as well as who's going to be having a conversation with MCX. So stay tuned in for that.
Welcome back. Joining us now is Chitranjan Rege. He's head of base metals at MCX. Chitranjan, hi. Thank you so much for joining in. And I understand the last 3 years have been kind of a lull when you look at nickel as a commodity after what we saw in 2022 on LME after that Russia-Ukraine war escalated, and the way the nickel prices moved in that 24 hours. Since then, LME hasn't been able to pick up, and we've seen that impact happen on nickel futures on MCX as well. With this new offering, with some changes, first of all, what are the changes? How do you see now stabilizing or filling in the gap that we saw in nickel trading?
Thanks, Manisha. I must say March 2022 nickel was a bad dream.
Yeah.
This is all behind us. As you rightly pointed out, I mean, the change what we done, one is the trading lot is now 250 kgs, and the delivery lot continues to be 1.5 tons, which is, 6 times of that. The delivery center combination has been rationalized in the sense the primary delivery center at Thane continues to be the one, and we have removed every other thing so that the in terms of confusion where the delivery would come and all of that is put to rest. And finally, the expiry date of the monthly contract has been moved away from end of the month to the third Wednesday of the month. As you would appreciate, most of our, in fact, all of our metal contracts used to settle at the month end, and a few others in other segment as well. In the delivery-based model, then the challenge used to that there are too many contenders for the investor appetite, and the idea was to move this expiry to somewhere else so that on a standalone basis, there is a good opportunity for investors to look at this thing objectively. So this contract now from the September expiry onwards would have 250 kg trading lot, single delivery center, and expiry revised to the third Wednesday of the month. These are the changes we have proposed and implemented.
Chittaranjan, since you do watch what's happening in the international prices as well, has LME nickel contract also picked up? Is the volumes coming back?
Yeah, I mean, the initial 1 year, I think the March 2022 onwards, it took a while for the entire international market to come to the terms of what challenges it happened, but progressively, things have improved. Definitely, the contract also has improved. The deliveries cycles, all of that also got rationalized. I learned from the physical market that the quantum of inventory lying into LME warehouses is also pretty decent, significant, I would say. And market is already talking in terms of whether the prices are good enough for the smelters and a lot of factories to work with good margins, or whether they should take a break. So I think the normal trade and normal demand supply parameters or issues are back in business. So I would say the history is behind us, and I think we are all looking forward for a more positive and encouraging response to the contract.
Chittaranjan, also the fact that India imports all of its nickel that is in use as well, I'm assuming that this contract is going to be quite important in that sense. How are you also looking at the participation herein? I mean, this clearly is something, nickel is used in stainless steel. It's an important one when it comes to renewable energy as well. How are you looking at the participation mix here?
Right, Manisha. So, this being entirely an imported metal, the producers of the stainless steel, and obviously they have a direct access to the import, a lot of that. But there is a huge amount of import which comes by the traders, who would extend the delivery just in time to a lot of medium scale and the SME entities. So my sense is that all of them required some kind of hedging mechanism. And in our previous avatar also we saw all of this very much being party to the price discovery and delivery. So I am very, very hopeful that we will bring the same value proposition back on the table, and I am sure they will all subscribe to it. The only change, which is the three changes what I mentioned already, including the expiry date being revised to third Wednesday. I think market will appreciate the utility of this contract.
All right, that point is well taken, Chittaranjan. Thank you so much for joining us. So that's MCX yet again launching a new contract, and this time it's nickel. There have been changes in the contract that was traded 3 years ago. So delivery center, delivery quotation and, of course, the timing as well in sense of expiry. All those three changes coming in the new contract there. But with that, let's go for a very short break yet again. When we come back, we'll put focus more towards news and updates.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is back about the 24,900 level, managing to hold on to gains of almost 1% and more than that in today's trading session. But let's talk about Ola Electric. Their gigafactory in Krishnagiri is now fully functional, and that's the word coming in from the company's founder, Bhavesh Agarwal. He tells my colleague Rachna that their top-end bike and scooter will be powered by them, and upcoming festive season looks promising. Listen in.
As you know, 15th August is our annual event where we make technology and product announcements. So there are 3 or 4 key highlights that I want to share with your viewers. Firstly, 4680. We are hosting this cell in India's first gigafactory. And you can see the gigafactory is fully functional, the 4680 cell is ready. And the first announcement was that our 4680 cells will be in our products this quarter. I had shared that with the street in our quarterly earnings also. So by Navratri this quarter, we can expect both our bike at the top end and our scooter at the top end to have a 4680 cells in there. We've been working on rare earth-free technology for a couple of years now, and in this current context, it becomes even more important. And next quarter, our first vehicles with our ferrite motor will be coming out in the market. And we have a roadmap from ferrite to magnetless motors also.
I start by speaking about market share, what we've been seeing in month-on-month registrations.
Yes, very important.
The numbers have been quite stagnant and in fact at the losing end as well. With these announcements, what's the hope going forward? How do you plan to regain what has been lost?
See, I want to start from 1 year ago. It's a 4-year-old company. We spent the last couple of years building our product portfolio and expanding our distribution. And in the last 1 year, our competition has expanded their distribution. We have changed our strategy in the last 2 quarters to go from pure penetration to profitable growth, a balance of scale as well as profitability. And that's what our Q1 results showed. Q1 results were much improvement on margins as well as on bottom line, while also starting to recover some market share on a sequential basis.
Still very tough, a tightrope to tread, because like you said, while profitability has been a focus, at the same time the competition is picking up. So how do you manage that?
That's what I'm coming to. We have built both the scale as well as the profitability. Our competition is now doing what we did 2 years ago. So if you ask them their gross margins, they will be too shy to share. But we have a good balance between profitability and growth, and you will start seeing our market share increase as our new products come into the market, as our bike scales up. Festive is going to be this festive is looking good for us. We're quite excited about how our Gen 3 products and our bikes are getting received in the market. And these products, we are increasingly putting more inventory across our 3,000 stores.
Okay, so that's a word coming in from Ola Electric. For the markets, the Nifty just about holding with a gain of around 282 odd points. Sensex also has scaled off from the day's high, but nonetheless still holding up strong. We'll take a short break, but up next we'll get you more on the markets, and we'll focus on our movers and shakers segment, where we'll focus on all of the stocks which are moving and shaking at this point in time. Stay tuned. Welcome back. Well, on to our movers and shakers segment, where we track a whole host of stocks that are buzzing in trade. First up, we're starting with Vodafone Idea, which is reacting to what was a mixed set of Q1 FY26 numbers. Vinny, tell us more.
Hi, Ekta. So yes, Q1 FY26 not that great. When you look at it, net losses surely have narrowed down versus what we saw in the last quarter, but still at 6,608 crores versus 7,166 crores. Also, the net loss figure is much higher than what the street was expecting. Revenue 0.1% growth sequentially. Nothing exciting there. Margins have seen a contraction as well. ARPU 165 versus 164, so 0.6% improvement that's coming over there. Now, company continues to report a loss, and this is the 30th quarter that the company is reporting a loss consecutively. Total subscribers also a bit muted, 19.77 crores versus 19.82 crores. So keep an eye out on that. Not a great number, but yes, today the markets are chirped up in trade, and that is what is keeping the stock a buzz as well. But Ekta, we're also looking at Glenmark Pharma. That seems to be a bit under pressure today.
Well, yes, Glenmark is under pressure because it was a subdued set of numbers. We had the revenue, which was flat, the margins, which were lower than expectations, and the profit, which was lower than estimates as well. India was up only 4% year on year. North America did see a sequential rise, but it was flat year on year, and Europe declined year on year as well as Q on Q. The company has said that they have debt of around 1,500 crores on their books. The proceeds from the ISB 2001 deal that they struck with AbbVie is expected in September this month, or rather next month. Glenmark is targeting 23% EBITDA margins Q3 FY26 onwards, so that will be important to watch. They are going to be focusing on high margin products in the domestic market. They're looking to launch around 10 to 12 products in the US, and they've largely completed remediation work in Monroe, one of the facilities under the US FDA scanner, and will be starting commercial production soon, and possibly hopes to get the remediation done soon, and they're looking to grow in double digits in FY26 in the European markets. That's on Glenmark, but Astral and Supreme Industries and focus on the news on the back of news of anti-dumping duty on imports of PVC resin. Ria's here to tell us more.
Well, yes, today Astral and Supreme and in fact some other pipe players have also been trading higher, and this is after the DGTR has recommended the imposition of anti-dumping duties on the imports of PVC resin from a whole host of countries, and this is for a period of 5 years. Now, the reason that this is positive for plastic pipe players is that this imposition of ADD is going to lead to stabilization of PVC resin prices, which is the key raw material for the company. This is also going to lead to some normalization of channel inventory for these companies. Remember, the recent price volatility for PVC resin has impacted plastic pipe companies and has resulted in channel destocking, and it has impacted the primary sales volumes for all of these companies. In fact, on the back of this, PL has also said that they expect Astral, Phenolics Industries and Supreme Industries to be the key beneficiaries of the likely imposition of the anti-dumping duties on PVC resin, which is going to curb volatility and bring price stability. On the back of this, even some PVC resin manufacturers, the likes of DCW and Chemplast, are also trading with gains of around 4 to 5%.
Okay, and thanks so much for that. But last, we also have Zaggle Prepaid that's buzzing in trade as well on the back of some commentary that's coming from the management. Gaurav, take us through that.
Well, as when it comes to numbers, we have got good set of numbers, 31% increase in revenue, around 37% in EBITDA, and lastly, profit increase almost by 52% on a year-on-year basis. Now, this was also led by the ESOP cost, which companies said that will remain in the range of 6 to 7 crores. In fact, it has come down almost by 41% on a year-on-year basis in this quarter as well. When it comes to management commentary, they are saying that 35 to 40% of top line growth is what we can expect, and at the same time, EBITDA margin could be somewhere in the range of 10 to 11%. In fact, during the conversation with us, they also indicated that the 35 to 40% growth guidance is actually conservative because inorganic growth is likely to kick in from second quarter, and that is the reason why this growth can actually exceed, and they will relook at the growth target in the second quarter. At the same time, they also said that they also have 570 odd crores of cash which is with their company, and they will also look out for inorganic opportunities even further. So definitely good numbers, good outlook from the company, and as a result, we are also seeing this momentum in the stock price.
Okay, Gaurav, thank you so much for that. So those were the top movers and shakers this afternoon. But with that, we are absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next to Business Lunch.